You are expecting a tactical correction higher in dollar. Is that consistent with the headline on reciprocal tariffs being a pro-dollar story?
Yes, so I think over the past couple of weeks we saw very heavy selling the dollar, and for us we are more tactically bullish the dollar because we just think the dollar is oversold, and of course with the tariff headlines that's more pro-dollar, so I do expect the dollar to bounce from here. Of course the main driver of the dollar weakness has been a lot of euro buying that we've seen into European equities, so I do think the optimism on the euro is a bit stretched, and that's why we do expect a bounce in the dollar if Europe gets hit hard with tariffs on Liberation Day.
If we do get a negative payrolls number at the end of the week, is that going to undermine dollar, and if so, to what extent?
Yes, I think if we do get a negative payrolls, that would be a big shocker because I think the Fed does not expect a rapid weakening in the labor market. So I do think that that risk will bring for a dovish risk to the Fed, bring ahead of the cuts. We are thinking that they could cut in July, and we are expecting actually 4 cuts in the second half of the year given the tariff shock on the growth front. So we are more dovish on the Fed, and that's why in the second half of the year, we are expecting more dollar weakness, but right here, right now, given the oversold conditions in the dollar, I think it's right for a pullback.
Alex, thanks for that. Mandy has a question.
Yeah, absolutely. Hi there, Alex. I mean, the euro is a long way from getting close to parity that we were discussing last year, and yet currently sitting just below the 108 handle, seem to have lost just a little bit of steam of late. What do you think is going to go on with the ECB? Do you think that it would be a natural thing for them to just take a wait-and-see pause for a moment while all this fiscal spending is ramping up?
So I think the fiscal spending story is more of a 2026 story and beyond, but I think the market is very concerned that it is a regime change. The Germans are finally spending, the Italians are being more fiscally conservative, which is very strange, and that's why we got so much euphoria in the euro. But I think overall for the ECB, inflation, we got data yesterday on eurozone inflation that has been moderating. So I think the ECB can continue to cut again, and I think that's our house call. So overall for the euro, there are less and less support factors, and we do expect the overbought conditions in the euro to sort of retrace here on given the tariff threat.